What's up, chosen family? Chosen Trades here, back with another video for y'all. Today's video is going to be going over backtesting. Backtest with me as I show you guys how the model that I've been using for about a year plus now has really paid dividends for me. I'm just going to go over how I analyze the market when I'm going through a setup, what my thought process is, and what better opportunity than to do it during a backtesting session. So right now we see here I'm finding an opportunity to go long. Right now I'm marking up the 4-hour fair value gap. Now I'm just analyzing, making sure that everything is clean as far as my markups. The fib really is the dealing range from the swing low to swing high. That's when you're going long, and if you're going short, swing high to swing low. So I dropped down to the 1-hour time frame. Now I'm just marking up my New York hill zones for the session, the New York session. I like to do this because it allows me to get a better perspective on what price is doing. It allows me to really see the framework on what price action is doing. So now that I have my kill zone set up, now I'm just letting price play out. Price has tapped into the 4-hour fair value gap. Now that we've seen it tap into there, now I'm just going to be patient and really analyze what's going on currently. So currently I go to the 15-minute time frame, and I'm seeing that I want to see a break in structure just to show that bears are no longer in play and that bulls are in play. So I use my cursor right now to just kind of analyze the market structure. So I ended up making the conclusion that right here where I have my cursor is a nice market structure shift. It follows the market structure well. Price makes that break nicely, and we see price trade up to the upside. I picked this one level in particular as opposed to the other lower high because I just thought that was easier to gauge as far as entry. You guys will eventually see that later in the video as far as how my entry goes. But now right here I'm marking up the bullish order block. For those of you who don't know what an order block is, an order block is a change in the state of delivery, meaning, for example, in this case with bears going continuously to my zone, to my fair value, I would want to see price do a change in state of delivery, meaning to have a large volume movement going in the opposite direction, which is the bullish momentum. And we see that here. So now I pause the market replay just to see exactly what price is doing. I see that price nicely trades to the bullish order block entry. Right here I see this, I highlighted this green level as a 3-candle institution order flow. So that's basically just a confirmation for me showing that price has intentionally moved the market down and will eventually reverse. So that was one of my confirmations for entering this trade. So I didn't enter off that inverse doji. I was going to enter off the next one. As you could see on my entry, I'm going to enter off that one instead of the inverse doji because I just want to see that bullish confirmation, that bullish candle as a go ahead. If I see another bearish, then I would have had to be patient. But since I see that bullish inverse doji, I ended up going for the entry. And as you can see, I also mark up that 3-candle institutional order flow. My first level is about a 1 to 4 setup. So I'm anticipating price to do a draw liquidity all the way to that level. And then you can see here me marking up another level right here. That's another area where I deem price to hit, and that's a 1 to 10 setup. So granted, this is all market replay stuff. This is all with the benefit of hindsight. So obviously some people may catch it, some people may not. I'm just showing you my strategy and how it is playing live in effect in this market, in this backtesting session. So we see the price playing out. We see price moving aggressively. I would have entered around this area, but it didn't really drop into that fair value gap as I wanted. But nonetheless, we see price moving up aggressively to the upside. We see price hit my first level. So that 1 to 4 is hit. I'm taking majority of profits right here just because it is a 1 to 4 setup. I mean, who's catching 1 to 4 setup consistently? 1 to 2 is really bread and butter. 1 to 3 is even nice, but 1 to 4, I mean, that's amazing. So why wouldn't you want to take majority profits? And majority profits really depends on the trader. For me, it can go from anywhere from 60% plus upwards, or 60% plus. So yeah. So we see price kind of retrace a bit and then aggressively moves to the upside. This is the opportunity to add an extra entry, which is what I do here with this markup, this discount bounce that I marked up. So I'm going to enter right off the 50% area. I'm just getting my levels nicely set as far as my stop and take profit level. Usually you want your stops to be below structured low. So here I do a 50% of the large volume candle that you see right there, and ends up moving to the upside. So we're going to continue watching this and see how price plays out. So we're seeing price play out. I'm just doing another markup of the session. Marking up the time and price delivery definitely helps me understand the framework that's currently going on. So right now the framework is the ICT silver bullet. We have that entry at 10:15 a.m. Eastern time. So I just want to make a note of that, just to know that this is all within the New York session. You can still catch these setups that are playing out. So now that we see price really move aggressively to the upside, we see it is a bit shy from my final take profit. So now if you saw that break a structure right here, you would have taken some profits here and then went break even, just because, like I said, the market is unpredictable in the sense of we don't always know what exactly it's going to do. But obviously with the right technicals and the right strategy and analysis, back testing your strategy, ultimately there's no reason why you can't be profitable in this space, in this industry. So I took my first partial of the second position. We see price hit my break even or my stop profit of what would have been if I had taken the entry. And then now I'm just showing you guys, in a perfect world, had my TP level been a bit had dropped down a little bit, then it wasn't really at that final 1.04501. Had my final TP not been there, but it was actually at 1.0458 or 1.04463. Those levels would have been fine for price to hit. Just letting you guys watch it again. And you see, boom, price nicely hits both levels. And then you would have been out the trade completely. You would have bagged 1 to 10 on the first position, and then you would have bagged 1 to 4 on the second position. So all great entries, a great setup, great entry. And as always, you got to pay the trader, right? Thank you guys for watching this video. If you have any questions, comments, concerns, drop them in the comments. If you really found this video insightful, like the video as well. I really appreciate you guys' support on the channel. We're growing tremendously. We're growing at a really nice rate, and I really appreciate everyone's support. Anything else that you want me to do on this channel, just let me know in the comment section below. Now with that being said, signing out, Chosen.